everyone. My name is Sandra Williams, and I am the host of the I Shall Bloom Show. Yes, a show where we interview stellar individuals whose work and legacy has profoundly uplifted our communities for the better. Each week, we interview a new guest and we talk about and take a deeper dive into the work that they're doing in their lives to collectively learn, sharing ideas and experience. You see here at I Show Bloom, you show bloom, and we show bloom. Today I have Trina Forcey, and she is going to talk about the benefits of life insurance. So without further ado, here is Trina Forcey.
Hi. Hey, thanks for having me.
Thank you.
It's a
Thank
pleasure.
you.
It's a pleasure.
Yes. So we are going to talk about life insurance and the benefits of having it. We don't want to, we always think of life insurance of death, but she's going to tell us and teach us today a difference, all the differences and the benefits of having life insurance while you're alive.
Right.
So without further ado, Trina, Presley!
Hey, y'all. And yeah, I just want to kind of reiterate what you said. We often think of life insurance and equate that to death, and that's not necessarily the case. Life insurance is a living benefit, and there has so many, a multitude of uses that you can use while living. So, I just want to stress that point. So I'll go over just the basics. Your term insurance is more of your
The difference.
the differences of term and whole life, because a lot of people just get confused. I mean, it's a lot of information. It's daunting information, but I keep it very simple for my clients.
Yes.
They really like the way that I educate, help to educate them. And these are conversations, quite honestly, that we did not have in the household growing up.
Yes.
Nothing wrong with that. You don't know what you don't know, and our parents, maybe knew a little bit, maybe they didn't know a lot, but
Yes.
so we learn as we go. And unfortunately, sometimes we're at an older age and maybe a little less healthy by the time we figure it out. I think the stats show that on average, people think about life insurance at age 50 or above. So by that time, it costs you a little more. You may possibly be a little bit less healthy, so premiums can go up. But so just the basics. Term insurance, you can think of that like your car insurance or your home insurance.
Yes.
It's there for the what ifs, and that is important. You want to make sure your family's taken care of in the event that you don't make it home tonight. You want to make sure that the kids can continue their lifestyle and curricular activities, and they don't have to just stop and halt everything. You want to make sure your wife is not left to just figure it out. And am I going to be able to keep the house? Is my car going to be repossessed? So yeah, you just don't want to put your family through those things if you can avoid it. And term insurance is very inexpensive. I know that's relative to the household, but term insurance was built to be very inexpensive, and you can get a lot of coverage for a little bit. So that's something to think about. We also allow you to convert, with the company I'm with, we allow you to convert your term insurance over to whole life. You can do parts of it or all of it. So, and you have 10 years to do that. So that's a good option. Is maybe you're working at a job where you expect to get increases or raises or bonuses or a promotion later on, but you're not doing as well as you'd like to be right now. So you say, I can afford a little bit, not a lot, and then later on I'll do this. I'll convert it over. So that's an option. So that's term. Whole life, same benefits, all the same benefits, but the whole life has cash growth inside of it. So it's growing dividends, it's gathering interest. So your money's growing every day. And
Well,
and it's guaranteed. It's not in the market at all. So it's not going to go down. It's always going to go up and then lock and then go up and lock. So that's how your cash is growing. You can also borrow while you're living, while you're young and you're growing your family, and moving on to different milestones. You can utilize that money. You don't have to pay it back. There's no penalty. You always want to leave about 10%. You can take out 90 something percent, but you always want to leave something to keep the policy open. As long as it's being called a loan, and you might think, well, why are you loaning me my own money? Well, we call it a loan to keep Uncle Sam out of your pocket, quite simply. Once you surrender it, it becomes ordinary income in your bank account, and it's taxable. So this is to keep it non-taxable. You call it a loan. So you borrow the money. You don't have to pay it back. There's no penalties, and it's creditor protected. That's one of the most important things. So your cash is growing. You have access to tax-free access. You have tax advantages while the money's growing. There is there's just so many advantages. Creditor Protected is one of the biggest ones that I love because someone could sue you, out in the streets for a car accident and just empty your bank account, and which is, not that just doesn't even sound good. Um, so those are the biggest differences. Whole life does tend to cost a little more, but you have to look at all the benefits you're getting with it, and you're getting cash growth. So yeah, there's like a plethora of benefits to whole life.
That's the whole life.
The whole
That's the
life.
one that covers the
hmm
whole,
hmm hmm
and you create wealth.
Right,
Okay.
right.
So
Um,
it becomes your own bank, really, huh?
yes,
Uh-huh.
pretty much. And so I made myself some little cards here because the information is so important. I just don't want to leave anything out.
Yes.
But yeah, so you have guaranteed cash growth. You have a permanent premium level set premium, so it will never change. Like I said, it's not in the market. You don't have to worry about things going up and down or losing money. It will always grow. Income tax free cash growth, dividend growth, and creditor protected. So yeah, so those are some important parts that I wanted to make sure I touched on.
Okay. So what is a financial house?
Financial house is where you're starting with the foundation, which is your life insurance, your health insurance, your disability, long-term care. So that's your foundation.
Yes.
Your foundation is necessary. If you think about your own house, a foundation is absolutely necessary.
Yes.
It's not often the most exciting part of the house or the sexiest part of the house or anything like that, but it is necessary.
Right.
So, and those are things you just want to make sure you have in place to start building on. And then we're all kind of in the middle of for your thrift savings for your military folks out there. So all that's your accumulation phase. That's kind of where we are right now. I will say that when you are dealing with your 401k, if you have old 401ks at an old job and you've left them behind, you need to move them. So you need to, look at your last statement. You should be getting email statements or paper statements and figure out if you've been losing money, making money, is it staying the same? But it's important to move it. You're basically moving it from the left pocket to the right.
Yes.
So, with someone like us, you move it with us. Again, we put it in a guaranteed fixed account where it's doing nothing but growing. It's no longer in the market and it will just grow. Where it is right now, it is in the market and it's not being managed. That's the most important point you can take away is that it's not being managed. When you leave a 401k behind, it's like leaving your child unattended. It's not being managed by anyone. So the companies that it's with, it could be being bought, sold, merged, going out of business. Like you don't know what's going on with it because you don't have eyes on it.
Yes.
So it's important
And
to,
that's a key red flag.
yeah,
Whenever you transfer jobs or leave a job, you have to make sure that you take that 401k with you
yeah,
whenever you leave.
yes.
Okay, that's good.
And there's not a limit. If you've been gone for that job for a while and you just forgot all about it, I mean that happens all the time, or you just
Yeah.
didn't know what you didn't know. Just go back and talk to HR or find a statement and contact the company and say, hey, I'd like to roll this out. Of course, you need to have a conversation with a financial professional like myself, but to
Yes.
figure out where you want to move it, to make sure that it's that's doing, and I'm not saying you have to go with me. I know what type of agent I am, transparent, honest, and going to keep everything real with you. So, and I try to keep it simple. So I'm just saying, don't leave it, don't leave it behind. It does need to be moved. But yeah, your financial house is going to start with your foundation, and that's why life insurance is an important part of that foundation. If your foundation is weak or cracked or has exposures or gaps, then it's the rest of the house is kind of going to be unstable. So you just want to make sure you have some important things in place. Your Once you have your foundation, the next thing you want to have your some emergency fund. And for some of us that's so hard to build up because just day-to-day living and life happens, they say life be life and sometimes. So it's important to try to establish an emergency fund, and that could mean whatever it means for you. We recommend 3 to 6 months of income in your emergency fund because you don't know what could happen. Your water heater could go out, or your car could break, or what have you. So 3 to 6 months, but it's really whatever you can put there just to have something in your emergency fund. And then we talked about the accumulation phase, which is everything you're building right now. Um, at the middle age,
Yes.
going into retirement, and then the rest of once you retire, that's your venture capital and your play money. That's vacation time. That's I want to flip houses. Whatever you want to do, you because you've accumulated your money and you've put it in the best tax free positions. So yeah.
Okay, so like we say, you talked about the 401,
Hmm.
okay, and the moving your monies if you leave another job. You talked
Right.
about retirement plans.
Right.
So like you said, it's important to plan because then when you don't plan, you plan. When you plan for success, you plan for
Right.
success. When you don't plan, you plan to
When
fail.
you fail to plan to fail.
Plan to fail. Yeah,
Yeah, I remember
yeah,
that
that.
quote. I remember that quote.
Yes, and that is so true. It's just um, something else is in control of your
Right.
future. When you
Right.
don't plan it yourself, we can take control.
Right.
So,
And I can tell you a few things that
mhm,
stop people from taking action.
yes,
Typically, what I find is what stops them from taking action is not knowing where to start,
yes,
not understanding the whole purpose behind life insurance, being afraid of what it might cost, and just the mentality of I've got time.
yes.
So, I always say it's great to be hopeful, but it's better to be prepared.
Yeah, yeah.
So,
Proactive
yeah,
versus reactive.
right. Proactive versus reactive. Absolutely. I love that.
Yes.
So,
So,
yeah.
is it too late if somebody's in 48 and they have
No, I
it's
mean
too
that's a great age. That's a great age. I help insure people all the way up to 70, 75 years old. So, you know, it's just about starting. It's just about reaching out and figuring out what are my options. Even if you feel like you're starting late in the game, there's always options. We can figure out a way to get you caught up and not break the bank. So,
see there's always hope. There's always a
keep
way.
keep hope alive.
Keep hope alive for real. For real. So, well, I mean, that was a lot
Yep.
and
Yep.
a lot of knowledge that I didn't even know about even creating wealth right there with your insurance, your
Hmm.
life insurance that protects you in the end of
Hmm.
lifetime.
And you can
Definitely.
have more than one policy. Some people may have a policy with other companies. Um, you can have policies, as many policies as you want. You may have a 10,000 over here, a 20,000 here, a 50,000 here. And the important thing is to ask the right questions. If you have a policy and you really don't understand what you bought because it was back in the day,
Yes.
or the agent told you one thing, but I'm finding that a lot. An agent told them one thing, but in the end, it turned out to be something else. So I help them kind of decipher what policy actually is,
Oh,
and
see.
if they bought what they thought they bought.
Right.
So.
See, it helps to have a knowledgeable agent too, and a knowledge agent that actually has integrity, and first of all
Mhm.
that integrity, but then has experience and was able and have patience to break everything down
Mhm.
because sometimes people are embarrassed to say I don't know, what I mean, or just don't know. But sometimes it becomes like an embarrassing. Well, I'm not going to ask her that.
Mhm.
So today actually this wisdom and this knowledge that I receive is just like an eye opener, like you can have power even over your wealth, your wealth, what I mean, and then having just the knowledge and just having be assured now, like if there is anything that happens, that's I mean that's even God talks about creating wealth for your children, to leave an inheritance to your family, to your children. So it's his law.
Mhm.
So when we leave our families, well, just like you said, just struggling now. They had a lifestyle, this, you were providing this for the kids, and all of a sudden you pass away, and then it's kind of being selfish because we don't know. We don't plan to be selfish, but it really is.
Mhm.
You
On
know.
on that note, I'm glad you brought that up. It's a great point. When we talk about long-term care, now we're talking about life insurance, but there's also long-term care, and a lot of people don't understand long-term care. A lot of people think Medicare pays for long-term care. They do not.
Mhm.
Medicare will cover the first 90 days.
Uh, that's not
That
enough.
is it.
Yeah.
And then you're in the hands of Medicaid now, and you will get whatever care Medicaid dictates,
Mhm.
and you go where they say you go, and you get the kind of care they say you get. So, again, put the power back into your hands. Get your own long-term care policy. There was recently a Washington Cares Act that kind of forced them to get long-term care through Washington Cares Act. So now you're getting 36,500, and that's going to roll out eventually. It's going to roll out to California, Florida, Texas, and a couple of other states. Washington was kind of the pilot program, and I think they're kind of working out kinks. But 36,500 is about $50 a day care. Do you want $50 a day care? Do you want $100 or $150 day care? Do you want to remain in your home? Do you want to go to facility? Do you want to have the option to do either?
Right.
That's important. That's what long term care is for. Again, it will not break the bank because a lot of people say, "Oh, my kids will take care of me, my daughter, my son, my niece." But have you had that conversation with those family members? Are they aware? Because they're going to spend on average about 34 hours a week on top of their 40-hour job to do, to take care of you, to be a caregiver. Um, so yeah, like I said, it can be kind of selfish to just assume these people are going to do these things, and they're either going to have to take less hours at work, quit their job, or figure something else out. So these are conversations that need to be had. If you feel like family is going to take care of you, just make sure you have those conversations with family so they are aware and the proper planning can be done. Otherwise, you need to look into getting your own long-term care plan before the government comes in and forces you to do this 36,500.
Yeah,
Um,
that's
because and I think it's like that gives you 2 or 3 years worth of coverage.
that's it. And that's yeah. Then you're me being a nurse and working when I worked in the nursing field or in the hospital actually. I loved convalescence. That was my convalescent geriatric, gerontology. Gerontology was my gift. I loved. But I met a lot of ladies that was angry at their family. They had great jobs, they had beautiful homes, but they didn't take care of they thought that their kids would take care of them or their husband or their family. They didn't. They put them in a home, in the the convalescent home that I worked in. So a lot of them were bitter. They were still able to be able to live at home, but the kids chose not to and put them in a nursing care. So if she had followed through with these type of
Hmm.
policies, she would be able to have a caregiver and
Hmm.
stay in her own home, and the kids staying in their home now. And so that whole thing. So I did
Yeah.
meet a lot of, people who were very disappointed in being in a nursing home when they shouldn't be there.
Right.
So
And
I love
and
that.
and don't be confused with equating long-term care with seniors or elderly because 80% of the people under 65 will experience a long-term care event in their lifetime. So that's quite a bit. I experienced a long-term care event in 2013. I was out of work for 3 months. Never saw that coming. I had a bowel obstruction.
Yes.
Came out of nowhere. And so I was in the hospital for 2 weeks. They removed a foot of intestine. Um, and everything thankfully was okay, but I was at home, with wound care and all. That's just something I never saw coming. I mean, you could fall off a ladder, you could be in a car accident, God forbid, but anything can happen. This is unpredictable. And then all of a sudden you're out of work for 3 to 6 months. That's a long-term care event. You're you do have insurances through your job like disability and some short-term disability. Those things cover you up to a certain point,
And
and
they're
just
peanuts most of the
right.
time. Even
And
I mean,
right.
the money is not. I mean, it's nothing. You're still struggling.
Yeah, and
So
just remember having, like you said, the power of having your own insurance policy, life insurance policy, or long term care policy. That's having power. That's you calling the shots, putting the ball back in your court because um, when you go to these facilities and have to rely on someone else, like through your job, if you are retired, or sorry, if you retire or you quit or you're terminated. Um, that coverage goes away. And so you might have been at that job 20, 30 years or 15 years.
yes,
And so now you're a little bit older, possibly a little less healthy, but you're definitely going to be a little bit older. So
yes.
now you're out there trying to get insurance on your own, not through a job, and it can be costly. So, get it early, talk to your kids about getting it early. It's really peanuts when they're in their 20s and 30s to get life insurance versus when they turn 50, 60. Because it's kind of like you're a little bit you're playing catch up a little bit. But yeah, just get it sooner than later and get it outside of, like I said, work, because the work insurance you can't take it with you. If you do, it's through Cobra and it costs an arm and a leg.
Yeah, Cobra is just too expensive. I wanted to ask you, like, do you have to have a physical? Like, if someone came in older, do they require a physical?
It depends. They don't always. I just had like I've had probably in the last couple of years I've had about 6 clients where they didn't do blood or urine, and it just depends on the amount of coverage that you need. Um, Insurance coverage goes by the age, the amount of coverage, and your health rating. So those three things play a big factor. And sometimes just under a certain age, they don't even do a health rating. I had a couple of clients of 66, they didn't even do blood and urine. Just depends on when they go out to the national database and look at your medical history. If they see something that triggers them to request blood and urine, they might. But if they feel like they can get everything they need from the national database, then they don't. So it just depends. They don't always do blood and urine. If they do with my company, they come to you. They make everything as convenient as possible. They come to you. Takes about 5 minutes. They do blood and urine. You know, write down the demographics, your name, age, date of birth, that type of thing, and then they're out of your hair. But they try to make it convenient. You can go to the office, but um, they they have the nurses and the techs come out to you. Yeah, if you need them to come to work, if you need them to come to your home, if you need them to come in the evening, because I work 9 to 5. If you need them to come on a Saturday, so we really try to make it convenient for you.
Yes. And so um, that's the missing part. We always want the big home or the nice brand new home in a white picket fence.
Mhm.
But included in that, it should be life insurance, which is your financial house
Mhm.
in order. So those are different parts of a house,
Yes.
So I thank you. So what do you want to leave with us today?
Um,
So much information.
what do I want to leave with you today? Well, I would say to think about your why. Who or what is your why? Um, you you have do you have assets that you want to protect? Is it assets that you want to protect or preserve? Is it, or who is your who that you want to make sure that they're able to go on successfully should something happen to you? It's a big impact. People don't really think about. I oftentimes think about, like, okay, if I were to, something were to happen to me and my husband's left there, or something happens to him, I'm left there. You don't think about all the little things you take for granted, as far as, like, okay, we split the bills, but honestly, he pays like about 5 bills that I know nothing about. um I know they exist, but I don't worry about it. Kind of take it for granted because he pays it. But should something happen to him, I've got to figure that out. And these are things like, the car insurance, the phone bill, our cell phone bills, and things like that. Like, okay, that money has to come from somewhere, and I've got to figure it out. Um, and people know they have insurance through work, but they really don't know how much they have. So that's important. Go out and look at, make sure you know what's going on with your 401k. Make sure you know what your life insurance at work covers, because a lot of people say, oh, I think I have 100,000 or 200,000. Now, if you really think about how far is that going to get you, if something does happen, you might be okay for a couple of years, but what happens after that? So you've really got to put some things in place and do some proper planning. I mean, adulting is not, like I said, it's not the sexiest thing, it's not the most fun thing, but it's necessary. We are adults, and we need to make sure that we take care of our family.
I appreciate that. I appreciate you coming. We need to bring this up more, because it's only we only kind of hear about it when someone's died, passed away, or something. But this, again, she talked about all the different types of insurance, term, whole, and there's
The different,
the different types.
yeah, the different
Financial
aspects.
coverage, as I guess we can cover, we can say. So I learned a lot today, and I'm sure you are. So, what company or how would someone reach you?
I'll give because I'm keeping this kind of separate from my company, because we have to go through certain protocols to get things approved when we talk about certain things. So I'm keeping it separate, unless you reach out to me, and then we, work together. Then we bring up. So right now you can reach me at my phone number, 210-309-2906, or my email, which is my first name, Trina, number 4, letter C is in Charlie, at gmail.com. And then, once we get going, or have a conversation, and usually it's just a 10-15 minute conversation to just see what goals you're trying to accomplish. If I can be of service, do you already have something in place? And because we never want to remove good works that are already in place. That's one thing that we pride ourselves on. So, our company's been 5 years. We dividends for 169 years straight. So, this company ain't going nowhere. When people were closing their doors during COVID and all that, we were doing excellent. So it's because we have great customer service and because we do the right thing for the right reasons. Yeah, when it's appropriate. So yeah, I would say if you can change your family's narrative, why won't you? Um,
Today.
yeah. If I mean you if you can say how this, if you can have some say in how the story is told and how the story ends, why wouldn't you?
Yes. And I taking power. Taking
Take
power.
that power back.
Wow.
Your Grammy and Pappy would be proud.
Yes.
They'll be proud. It's just a different day and a different time.
Yes. It's a different day and a different time.
And people are working, so it's just we have to figure out a different way to navigate through life.
Take the shh off of insurance, life insurance. Take the shh off of it, and then that's again power. So I appreciate you, Miss Trina, for coming on the I Shall Bloom show. Again, I'm Sandra, host of I Shall Bloom, and to reach me, you can reach me at Sandra at ishallbloom.com, and also my YouTube channel is I Shall Bloom Talk Show. So if you would type that in the search bar, subscribe, check the like, and also ring the bell because you never want to miss a premiere episode of the show. And you know what the saying is: I shall bloom, you shall bloom, we shall bloom. Bye now.